The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 27th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm actually grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, if you can't dial in, let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tigers Den. Well, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 36 points. S&P is flat. NASDAQ basically flat. Russell 2000 back a couple of points. Semis are down 1%, 14 points. So we'll take a look at those. If you remind me, probably don't need to. You've got gold up $7. Silver's up 3 pennies. Light sweet crude back 77 cents out there, leading the charge to the upside. It is Bitcoin Investment Trust up $230. Gotta love that, 21%. You've got Amazon up another $15. Priceline up 14. Google up 11. Align Technology up 8. That's 3%. To the downside, Regeneron Pharmaceuticals off $9 or 2.5%. Nettie's off $8 and change, 2.5% there. Chipotle down $6. Western Digital off 6. So there's some things to look at. Of course, I want to look at what you want to look at, and that what it is that we want to look at goes first to our first writer, and that was from Russell. We have 2 emails that came in before the show kicked off, and what Russell wanted me to take a look at, he had been reading some articles today, I believe, that were really talking about how there are some signals out there. The author of this specific article talking about the Hindenburg omen as well as the Titanic. 2 things that did not end well. And the inference there is that so too will this market. It will not end well. So let's go take a look at those signals out there. And the first thing that I would say to you, all of you listeners, Russell specifically, I wish this was a signal that worked well. I mean, it's just lined up perfectly. You got something called the Hindenburg omen out here. And if we take a look at this specific chart, if you watch us on TigerTV, you're going to see a number of red arrows. This is taking a look at the New York Stock Exchange, by the way. And as we take a look at this, those red arrows are providing you with Hindenburg omen signals. Now, these are just basically the 2017 signals. We can go back further. We're not going to waste our time doing that. This is from December 1st, 2016 is when you see the first signal. Now, many of you may be saying to yourself, well, how the Sam heck do you actually calculate the Hindenburg omen? It's very easy. Each of you can do this. There are 3 requirements. The first requirement, this is based upon the New York Stock Exchange. So put a chart on your screen of the New York Stock Exchange. Put the advanced decline oscillator reading on your chart. Put the New York Stock Exchange new highs, new 52-week highs in chart. Put the New York Stock Exchange 52-week new lows on your chart. That's what you're seeing on this specific chart out here. Now, in order for a signal to occur, you need to have both new highs and new lows greater than the number of 45. So 45 issues. Needs to be 46 or more issues that are above the new highs, new 52-week high and new 52-week low. That's number one. Number two, the New York Stock Exchange itself must be trading above the high of 50 days prior. So you got to go take a look at today or any other day and back up 50 days. And then the third element that you must have is you need to see that advanced decline oscillator reading be below zero. Well, all of these red arrows here have led to what? Basically, nada, zilch. David White did an excellent study on this at some point in time. Maybe if he's listening in, he can tell me what that percentage is. But it's a high percentage of signals that are just simply false. Just simply false out there. So do I put a lot of faith into a Hindenburg omen? No. Because I can tell you one thing is for sure, is if you go back as far as you can inside the New York Stock Exchange, you take a look at these signals, they have not been present before every major top out here. Now, this article specifically was talking about this cluster. And this is the cluster I'm referring to back between August 1st of 2017 to August 17th, 2017. If you rely on the cluster, you could get a cluster. You fill in the blank out there. So I will say, Russell, am I worried about the mere fact that we had a Hindenburg omen signal on the trading session of November 14th? The answer is no, no more than any other time out here. No, I suppose, you know, just by chance, just like you might be able to pull the one-armed bandit and get 3 sevens out there, or however that actually works. I'm not a big slot machine guy. As you can tell, maybe it's the 3 cherries that you get or whatever it is. You know, coincidence? Yeah, I suppose. Now, what this article was trying to do was to put the Hindenburg omen together with the Titanic. You know, icebergs ahead. And if we take a look at the so-called the Titanic symbol, I'm not going to go through that. Instead, what I'll do is use some of the elements of that Titanic symbol, Russell, and show you actually a fairly cool trading strategy out here. Because in this case here, it's using something similar with regard to New York Stock Exchange new highs and lows. Only in this case here, it's when the new lows exceed the new highs in quantity. Well, that is the bottom portion of my screen out here. And on the bottom portion of my screen, the red line is referring to the New York Stock Exchange new 52-week lows, and the blue line, new 52-week highs. Now, the cool thing, those red arrows on my screen refer to when there's a crossover on the bottom portion. Again, 52-week highs exceeding 52-week lows or vice versa. And you get a red arrow when that price oscillator, advanced decline oscillator, I should say, is down below zero. We saw a couple of those signals, by the way, the Titanic. Well, we saw the crossover signals. I'm just going to refer to something that is usable because the Hindenburg omen, it's not usable. It's not usable to go ahead and sell the market, nor so is this Titanic, you know, crash ahead either. Although you can, the way that I would say that you could consider using it is when you get these crossovers and the advanced decline oscillator reading is either north of zero or south of zero. All of those lining up because they can call nice little short-term changes in trend out here. You have one of those signals on October 25th. This is Stevie's Titanic symbol, one on November 2nd and one on November 8th. But voila, you had a nice big signal out here, bullish signal on November 20th inside the New York Stock Exchange. What's my take? Is there a top that's near? There's way better tools, Russell, that you and I can use versus the Titanic, which will just simply sink us. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Now, Russell and each of you out there, the better signal, that's been a signal that's been present before every major market top, every bear market, anything that you want to really pay attention to is the signal that shows up as Stevie's proprietary price relative strength divergent pattern out here. This formed at the 2000 top over here on the left-hand side. When we take a look at that arrow, formed at the 2007 top. And when this is a monthly chart that we're looking at. When this thing rears its head and follows the parameters out here, you're going to know that you've got some type of major market top. Now, if you're trying to call the top tick, you've got to shorten this down to smaller time frames, daily time frames, a whole bunch of other things that are out there. But with regard to a substantial market top like these Hindenburg and these Titanic guys are calling, do you really need to catch the very top? No. And you don't want to get out of harm's way until you have signals that suggest that you really do so. So much better consistent patterns for you and I to use, and that's the Dow Jones. That's a live chart right now. There is not one of those present on a monthly time frame. That doesn't mean that there's not some problems potentially under the covers, and we'll try to take a look at that. We want to go to our next question that came in from Audie. We took a look at this last week with her and take a look at Tesla. And just as an update for you, Audie, because I know you were taking a look at those TAS market profiles, there are brand new profiles that have formed today for both the daily and the weekly chart out here. And the levels you want to pay attention to from a daily perspective, it's somewhat bearish. Bearish from the standpoint that you have a brand new daily profile that formed below the prior profile. That says you want to pay attention to the price of 306.53. If you see a close below that, that's the bottom of the box. That tells you that you're going to go at least explore this little high volume gap to the downside from November 2nd, right around the 292.63 level. Likewise, if you're able to see this close above 319.12, it says you may have something to the upside inside of Tesla. Well, on a weekly basis, the actual structure of this box, let's go ahead and turn price off because the structure of this box is bullish. We say that because look at the center line of the box. Nowhere near the center. It's at 306.70 versus the bottom of 299.67. This says on an intermediate term base, as long as 299.67 holds, There should be enough energy for buyers to push price up to 363. Watch that. You close below 299.67, then it is not good for Tesla, ticker symbol TSLA. The second symbol that Audi wanted us to look at is Florida's, our First Solar, FSLR, is the ticker symbol. So let's pop that up on our screen here. Take a look at profiles. Now, in the case of First Solar, it's up against resistance, both its daily and its weekly, which, by the way, brand new weekly profile out here. Bullish structure, but that price of 62.57 has already been explored. Doesn't mean price won't take it out. There is excellent support inside of First Solar, or should be excellent support, at 57.38. You close above 62.57. That's both the weekly and the daily top of the box. Then it's off to the race. Now, the daily box shows a bearish structure, one that formed a couple of weeks ago. Again, the center line much closer to the high. So taking out 62.57 would be very strong indeed. And that is on First Solar. Other questions that have come in. We've got one inside the Tigers Den. Let's go to that one next. And then we'll go to James and Tim inside the Tigers Den. The question is gold preparing to launch higher? With 3 question marks. Well, let's go take a look at what is Goldilocks doing. Here is what I think. Well, we're going to look at it a couple of different ways. Let me find the first way. There we go. So here's what gold has done. So gold has done today what it should have done. And you might say, well, what the heck do you mean, Steve-O? What gold has formed here most recently, and this really takes us back, began forming, one would say, on October 27th. As price got down to the 1260, I can't read that, 1268. I got to make sure I expand those up a little bit larger. And then you'll see gold forming a higher low on November 3rd, another higher low on November 6th, another higher low on November 14th, another higher low on November 20th. You kind of get the higher low scenario. And so what that allowed us to do is at least create a rising price channel, the bottom, because we have so many connectors to form that bottom. More connectors at the bottom than we do at the top. The top looks like this is a pretty good connection area as well. And price today, I haven't changed this line. This is the same line that you and I drew in last week, or whenever we drew this line in. It wasn't today. That much is for sure. Price went right up into that so-called semi-resistant zone. So it's done its work to the upside. Can it bust through that? Yeah. If it busts through that as a breakout, not the way I would call breakout, because we already have the rising bottom. So it's already giving us that signal. So that's the first way. But to me, for me, gold has accomplished today what it needed to do, and now it can just simply pull back to the bottom. It needs to first get below 1291. It can bust out up to the upside. It can do anything it wants, obviously. I think more likely than not, we're in for a sideways move to a pullback towards the bottom of that rising price channel. Why would I say that? Really a couple of different things that are working in that favor. Number one, we've seen gold, basically, this is a daily chart, another daily chart. You can see really the move sideways. So whereas you and I were looking at another daily chart and you can see that rising price channel, when you take a little bigger, little larger view of it, you can see, it's really more of a sideways to rising move. But where my eyes focus on is not that, because we already knew that. It's the bottom panel. The bottom panel is taking a look at the price oscillator. Difference between two exponential moving averages, 19 and 39. The price oscillator is nearing the zero area. The reading is minus 0.702 out here. Now, we're going to have gold roll Wednesday, Thursday, I think Thursday. So we're going to be looking at a new contract. But in just staying with the December contract right now, we're really at or very near that zero line. So we're likely to see price pull back and test, of course, Stevie's red line. And it's really as price and Stevie's red line and the price oscillator at zero, that's what we want to see. We want to see all of that come together, and then either price just use a trampoline with regard to Stevie's red line, in which case it would say, yes, the answer is it's getting ready to launch higher, whereas a close below that would say, there's real problems with Goldilocks. Now, that's not where you and I stop when we try to answer that question, is it getting ready to launch higher? We also have to take a look at the December contract here for the yen futures. And the yen futures, as we speak right now, 125 in the afternoon, we can see its price oscillator is at zero. Now, we know directionally speaking, when the euro trades high, the yen trades higher, so too does gold. Not tick for tat out there, but directionally speaking, very reliable pattern is out here. Now, what's interesting today is gold is still trading, not gold, the yen futures, my apology, yen futures are trading above resistance. That's that little red horizontal line, that little dark cloud cover. That's a swing point. So ordinarily when you get this pattern, you see price and Stevie's red line meet. It could just be Stevie's red line is going to move higher, the yen just going to move sideways. It could be price pulls back. You don't know what the configuration is there. But what we want to see in order to truly see gold prepare to launch higher is we want to see a bullish test. A bullish test is a test of Stevie's red line. It uses it like a trampoline. And then the answer is easy. The answer then would be yes. So it's preparing to do something. I want to see these bullish tests before I would say, yes, indeedy do. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. So James writes in, Steve, hope you had a great Thanksgiving. Hope you have a blessed Christmas. Thanks for your help. Enjoy your show very much. Do you think markets in general will be stronger to the new year? Sent from my iPhone. Well, and thanks for listening on the iPhone. James, here is a chart. Hopefully you're watching on your iPhone out here. Now, don't pay necessarily attention to the heading out there because this is part of a presentation that I put together for Tom. The segment that I do with Tom at about 3:15 each day. I always like to kind of have something prepared instead of willy-nilly, so to speak, out here. And so and there's more to this, but I want to answer your question this way with regard to just statistically, the answer is yes, it is in your favor. This takes a look at the strength of December's since the March 09 level. It would look different if we looked at 09 going back the last 85 years. But right now what we're going to focus on is just simply since the 2009 bull market and what has occurred during the last 8 years out here. And what this tells us, you use the word strong, and December is typically the strongest month of the year out here. Not always, but it can be one of the stronger months of the year. You can see last year, 2000. So basically, the answer is this. If you just like percentages, you've got an 87.5% chance that says yes. And we've only had one down December out here, and that was in 2015. In 2015, we had much different chart patterns that were in play versus the ones that we have now. So as we speak on November 27th, the answer is yes, the market should continue to move higher through December. So thanks for your thoughts. Thanks for writing in. And watch the segment at about 3:15 on Tom's show, and you'll see all the other charts that kind of lead you to a conclusion that you can make on your own. You don't have to trust me. God forbid, don't trust me out here. Do the work yourself. Now, Tim writes in and says, do you see an entry price close to the current? Have the best of days. Okay, that's CODI. Okay, I see it now. So let's go take a look at our 3 time frame and see what CODI actually is. Probably ought to know that. It's a Compass Diversified Holdings. I don't even know how I would have known that. Now, what I need to do here is put this on because you're looking for an entry price. We can see this has been moving lower. I want to see if there's any pattern out here, Tim, that might show up on my system, and also double check, make sure I have the right symbol out here. And now nothing on the other side of the tracks out here. So you're looking for an entry price. And so we don't really have, what's the chart pattern that we really have here? Not a lot. Not a lot to go on right now. So what we're looking at here on Compass Diversified Holdings, Tim, new profile formed within the past 2, 4, 7 trading sessions. 1703 is your resistance level. Support might be at 1647 out there. So if you were looking for an entry price, that's a possibility. You'd certainly want to see volume come down there with less than 132,000 shares out here. Less than 132,000. That doesn't mean that it's formed a significant bottom, though. That's the only problem. It just means prices kind of jostling around. So nothing bullish on the daily time frame. On the weekly time frame, as we take a look at it, nothing bullish here because price for the last 3 weeks has been below the bottom of its weekly profile out here. So just kind of a consolidation-ish. Yeah, that's being very kind in my analysis for Compass Diversified Holdings. When I take a look at the weekly chart, monthly chart out here, here's the biggest positive that you could have. Let's see, what's the volume so far? You're at 2.2 million shares versus 4.9 versus 3.1. So the weekly profile does have a bullish structure, Tim, and the bottom of that profile is 1623. The actual low this month has been 1630, so that's close enough for us. Volume on a monthly basis has kind of been lightening up out here. If you want to take a long trade in this, 1647, 1623 maybe, and you would go ahead and close it out if you were to see closes below 1623, I would say. Maybe what you do is you give it a close below the March 1st level, which is 1590. So that's not giving up too much. So no idea if this is a bad tick, a bad month, a bad something or other. That's August of 2015. Well, no, it wasn't a bad tick, sort of. but we know that somehow there were active trades that traded down to 970. We'll just kind of ignore August of 2015. So that's what the charts here, Tim, are showing us on Cody Compass Diversified. You must have some reason or some knowledge as to why that is a good investment at this stage. So stick with that and go take a look at those price levels that came to us by the TAS market profiles out there. Okay, so that's all the questions that have come in by email. I think we've accomplished everything inside the Tiger's Den as well. But if you've got questions, you can call 877-927-6648. You can let your fingers do the walking. Send me an email, steve@tfnn.com, and of course inside the Tiger's Den, just about any ping will do. So let's go take a look at what else is going on inside these markets. Let's take a look at the words of caution on a short-term basis, if there is one, because I mentioned, the larger monthly charts out there to say, hey, here's what we want to see before there's any kind of a signal of some type of market top, because it's been present before, it's not there now. But on a daily basis, these are great tools as well. And what we can see out here is over the past, is the NQ, by the way, that we're taking a look at, over the past 2, 4, 6, 8 trading sessions, we have seen where price continues to move higher, does with less relative energy. Hey, you got a holiday to factor in there, Thanksgiving, so you've got light session. We have a TD sequential count that not confirmed, but formed, I should say. This is back, that's that blue number 13, November 21st on my chart out here, but still no bearish reversal signal. If you got a bearish reversal signal today, then we want to come back and take a look at it tomorrow, take a look at Stevie's red line, and then go take a look at support profiles on the NQ, on the daily, the weekly, and so forth out here. So this just says, okay, the pattern that helps to identify short or long-term tops, it's present. It hasn't formed, or it hasn't confirmed, or it hasn't completed. So it's nothing more than just kind of interesting discussion. It's more than that. I always pay attention to these signals because I know how well they work. You know how well they work. We take a look at it on short-term charts out there. So that's what the NQ has. That's the pattern that's present there. What the ES Mini has, same kind of pattern out here. Prices moving higher, doing less relative energy out here. Prices above the last bearish candle that formed out here inside the ES. And that was on the trading day of November the 9th. So really the top of that, which, by the way, the top of that price is $25.94.50. That's really your support area. Old resistance should become new support. Wouldn't be a problem in the ES, even if you did get a bearish reversal signal, until you saw price get inside or close below the top of that November 9th candle session inside of the ES Mini. If we take a look at the Dow out here, Dow Equity Futures contract, all that we have here is nothing to be worried about. It did have a 7th wave move. It's gone. Sayonara. Adios, amigos. It did that earlier in the session when that high was taken out. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. How cool is that? I don't know about you, the grocery stores around here, typically the Salvation Army comes out and, they stand in front of the doors and very nice about the way that they ask for money out there. And so I'm always giving them, a little cash here and there, and all I get for it is not having to put all that extra change in my pocket out there. But look at this at Tiger's Den. You can contribute, in essence, to the Salvation Army by buying Tiger Dollars. So come on over to the homepage at TFNN.com. Check out all the details there. Make sure you act now because it's going to expire soon out there. So and then I know that some daughter or son or spouse or friend or mother or father or whomever it might be is going to say, what do you want for the holidays? I just tell them Tiger Dollars. Then they can also be, in essence, contributing to the Salvation Army. All right, we got the Dow up 28 points. S&P is flat out here. We don't have any requests thus far. So if you've got them, put them in the Tiger's Den, and let's just kind of tool around the charts here, see what we see. Let's go take a look at, we were talking about the advanced decline oscillator reading inside the New York Stock Exchange, and right now that reading is 43.60, so it is still above zero. Tells us that buyers are still in control of this market. We do have a potential key reversal session today inside the NASDAQ Composite as the high and the low of Thursday, I should say, has been exceeded. Advanced decline oscillator still above zero, the reading 42 and change out here. So buyers are still in control of that indice. Inside the Dow, you're just at zero. So it's struggling to get that indicator above zero out here. If it closes the day above zero, well, that would be very bullish for the Dow on that front. There are some other fronts. Well, we already talked about how it took out that seventh wave out there. Looking at not the Dow cash indice, but taking a look at the equity futures contract, because I don't think the same pattern, I'm fairly certain the same pattern is not present in the cash indice out here. So this just tells us that the Dow is really, even though it's up I don't know, 29, 30 points, something like that out here. It's still struggling, actually, and really says that sellers are still the ones in control of that, even though we're basically near all-time closing highs, or we may even be at it. We're very close to it. So you got to get that advanced decline oscillating above zero. The spot volatility index just kind of been chugging around a little bit higher, a little bit lower, a little bit sideways. No issues, no problems until it closes above 1050. That's a 50-day exponential moving average number out there. So really no big deal out here other than the Dow. So the Dow says, you know, it's one to keep our eyes on. If we take a look at the daily equity futures contracts, price has just simply come back inside the Dow equity futures contract and tested the top of the daily box that formed 4 days ago. That's 23,469. So any pullbacks, even though I said there are troubles, a little bit of troubles inside the Dow equity futures contract, it's really not that big of a deal. It's simply price continues to find support, in essence, where it should. The other daily boxes are down quite a bit further from where we're trading now, so we're not really going to pay attention to them other than to suggest to you that the meaning here is that it is the markets, that being the it, is bullish. It is not bearish. If we look at the weekly profiles out here, we did notice last week that there were new weekly profiles that form. Price inside the ES closed above the top of that box at 25.94 out there. That's bullish. That's uber bullish. The NQ way above the top of its box, 6,004. Russell 2000 slightly above it right now. It's slightly below. So it's the Russell and the Dow equity futures contracts that we really get our next signal, that next signal bullish or sideways to even a retracement out here by watching the price level of 23,557 in the Dow equity futures contract and 1518. You're trading about 1517 inside the Russell 2000. Now that's a weekly set of profiles out there, but if you stay above those levels, that would be a beautiful thing. What else do we want to look at? And no, I'm plumb run out of things to look at out here that are of value to you and I. So I'm not sure what we're going to do for the next 13 minutes minus breaks out here. I suppose what we could do is let's go look at, I don't know, what do you want to look at? What do you want to look at? What other commodities? We looked at gold, really, silver, light sweet crude. So we look at light sweet crude. It's back 82 cents. Let's go see if there's some troubles in light sweet crude land. How are we going to do that? Well, I got to put up the continuous contract right now because I didn't add the new contract. I'll have to do that, but I'll put up the continuous on Stevie's other chart out here. And if we look at what price in essence has done today, it's just been a pullback to Stevie's red line. We'll go look at profiles as well, but we can see we've got a rising price oscillator still above zero. You do have a bearish candlestick today thus far, but still no big deal until you close below where we are at, basically right about now. If you do that, you close below that, then you can easily pull back into the prior swing points from the November 14, 15, 16 type time frame out here. But so far, price has just simply come back to test support. Let's go take a look at the let's go put up, see, I should have the current contract out here, light sweet crude. There we go, January 2018. Let's just look at market profiles and see what they signal to you and I. Well, weekly, boy, the profiles are so much lower than where we're at there, 55.63. That's the daily, I should say. The weekly, much lower, 52.01. Not a lot of information coming there. It would just be the 4-hour chart. In the 4-hour chart, here's the interesting thing here, and probably the place for you to watch. You had a nice little flush earlier in the day, but you can see that the box here, bullish structure. What we mean by that, 57.83 and 57.92, that's the bottom and the center, very close together. The top of the box, 58.16. So if, in fact, light sweet crude can close about 58.16, then what you're going to see is a move up to 58.52. And if it can clear 58.52, then you're going to run all the way back up to the highs. Likewise, if this closes below 57.83, so the bullish side, I just gave you those parameters, what to anticipate, what to expect if you close above those levels out there. If you were to close below this bullish structured box, 57.83, it's been tested, it's been rejected. Well, then that opens the kimono to an A to B equals CD to the downside, even a move back down to 55.63. That would be the top of the daily box out there. So that's what's going on inside the land of light, sweet crude. What else can we go put our eyes on? How about, well, I was going to say Amazon. Amazon, by the way, has a AB equals CD to the upside out here. It's a doozy. If we take a look at that, probably it's already drawn in here, so it'll just immediately pop up. And it's a confirmed one on the weekly time frame out here. And if you take a look at it, this is, by the way, this is what we'll call the conservative A to B equals CD to the upside. The reason why we say it's confirmed is you've got a swing point from the week that began July 24th, 2017. 27 million shares there. As that was taken out, you had 31 million shares on the week of October 23rd. You take out a swing point, you do it with wide price spread, accelerated volume. It says you really have an increased chance of a completed A to B equals CD. You see 1304 on my screen out here. There ain't no way that that's where price is going to stop in Amazon. Amazon headed to 1406, 1535. Jeff Bezos, he's having a very, very good year. Steve Rhodes from TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Hey, did you get enough football in? Certainly my favorite holiday and weekend. Nothing like getting your football fix in between Thursday, Friday, Saturday, and Sunday. And there's one more game tonight. So I think it's Baltimore, Houston, maybe, that is playing out there. When we began the show, I mentioned that the semis were back 1%. They're still down 1%. Let's go take a look at them. There was last week or the week before somebody had, said, "Hey, Steve, is there any top that you see inside the semiconductor index?" And the answer is potential top, yes. So we're going to watch this. What we're watching, you really have two patterns that have come together at the same point in time. Now, look, when these patterns fail, meaning should price take those out, it tells you again just how strong the semis are. The two patterns being price has been moving higher, doing less relative energy. Now, this is as a 1:55 in the afternoon. If price moves higher throughout the day and closes the gap, because there was a little gap to the downside, and that's after a price relative strength divergent program. That's one of Stevie's. My tool is used differently than anybody else uses it. And you have a seventh wave move out here. So you have two patterns that coincide potentially with tops. Now today we're getting a confirmation. We'll know by the end of the day out here. And price is also below Stevie's red line. So here there is that potential. You need to see follow through on the following trading day. And as I mentioned earlier, the NASDAQ composite itself does have a key reversal session with a price relative strength divergent pattern. Now that is assuming that the NASDAQ composite finishes one tick to the downside from the open. Then that would qualify as a key reversal session. However, this is a big however. This is a gigantic however. That doesn't mean a thing unless it's got that swing. And that swing says you've got to close below Stevie's red line. 68.62 as we speak right now. Folks, stay tuned. Your favorite polar bear in mind, David White's up next. Get over to that homepage at TFNN.com. Buy all those Tiger dollars that you can. Help yourself. Help the Salvation Army. And have a great Monday. We'll see you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.